Good evening everyone, hope you're all doing well. In tonight's video we're going to be running through multiple different chart analysis techniques and strategies, combining them all together to give you the most precise, reliable and consistent areas to take your trades from. Now in previous videos we've gone through levels of support, levels of resistance, channels, trends, we've covered the moving averages. Now in tonight's example we're going to be combining all of these strategies into one to show you where to take the most consistent and reliable trades from. So as you can see, we're on TradingView, we're on a blank chart right now, and I'm going to take you through the step-by-step processes that I'd go through to find and determine these areas to take a trade from. So as you can see, it's completely blank apart from these moving averages. Now we want to start adding in our channels, our trends, our support and resistance zones. Now what you've got to remember is not on every currency there's not going to be trend lines, there's not going to be channels, there may not be a level of support or resistance anywhere near the current price. So it's just a case of you working with what you've got, and eventually you'll come across something that does line up with your analysis. So we'll start by trying to determine a trend. Now we can see that there is a bit of an uptrend just from looking at the chart right here. We can see that there may be some kind of channel going on, but to find this out, we'll take the trend line tool from the top left and we'll start linking up either the highs or linking up the lows and then duplicating that to see if there is a channel. So we'll start with the highs and we'll take the high points here and we'll try and link it across as much as we can. And we can see that we can do something like this. Now obviously it's not completely pinpoint, and we've had the first touch here, the second touch pinpoint and the third touch. We had a little breakout at the start here which price soon pushed back into the channel, so we'll consider this a touch of the trend line. And then obviously we had this almost fake out where prices shot through this trend line and then completely dashed back below. So we'll call this an anomaly and we'll ignore this for now. So we'll say this is our trend line that we have in play. Now to determine whether there's a channel, what we'll do is we'll clone this to see if we have something going on towards the lows somewhere down here. Now if it is a precise channel, what we'll find is that it will be completely parallel, hence why we've cloned the top one, and we'll try and link it up with the lows now. So we'll start from the most significant lows down the bottom here, and we'll extend this obviously up into the future to link with the next most significant low, which we can see is obviously here. Now what you need to remember with trend lines and channels and support and resistance zones, it's never going to be pinpoint. So although your first couple of touches may seem pinpoint, price could reverse just before the trend line or just after the trend line. Same with support and resistance zones too. So you've got to bear that in mind. So you usually have kind of a 10 digit window where you could enter your trade from. Now we've got the basis of a channel, and we can see that on the most part prices stayed within this channel formation. Obviously what we can do is extend this into the future. So if we do see price come back down into this channel at some point, we'll obviously be looking to buy up from it. So we'll extend this into the future to see if it does hold up. So we'll do something along these lines like this. And then we'll look for other areas within this channel, areas of support, areas of resistance, to try to build our calls to take a trade. As obviously the more reasons we have to take a trade from a particular level, the better and more reliable that trade will be. So we'll have a look for levels of resistance, which we can kind of see just by looking at the charts. This has been a bit of a sticking point for AUD CAD. So we'll take the box tool and we'll start from these highs around this zone here. So we can see that we have a bit of a level of resistance just from here. Price has come up into this zone many times and reversed. Obviously it's quite a large zone, but we'll extend this across to see if it has kind of linked up with what's happening here, and we can see it has. We'll shorten this a little bit, make it a little bit more precise, and link up with the majority of the highs and the lows. So something along these lines here. So yes, we had a tiny breakout through here. We price wicked above this and then shot back below, but the most part price has been staying above or below this particular zone. So now we can see that obviously we had this previous level of resistance. Price has come into this zone horizontally, it's acted as a ceiling, and price has been forced down until we finally broke this zone on the 8th of Feb. And then since price was above, next time it came down into this same zone, it acted as a floor once, twice, three, four, multiple times across here, which obviously coincided nicely with the bottom of this channel. So almost two reasons at the same region to take a trade from. Now, if we have a look at the moving averages, we can see the yellow is the 200, we have the 20, and we have the 50. They also act as levels of support and resistance within themselves. So for those of you who watched the moving average video, if you haven't already, please do have a look at the previous video. You'll know that the yellow 200 moving average is a strong level of support or resistance. So when this is above price, like we saw in the bottom corner over here, it acts as a ceiling, price gets forced down. And when it's below, like we can see across here, it acts as a floor. Price comes into it, pops up, pops up, pops up, and then again multiple times around this zone here. Now, if we zoom in a little bit, what we can start to see is all of these zones are kind of joining up at the same region. We have the 200 moving average coming into this zone. We have this previous level of resistance now turned support in this zone. And we also have the ascending trend line. So all these three factors combined, in fact, all these factors singly point to a buy. They're all acting as a floor, but they're all acting as a floor in the same area. So now you've got three things stacking up, all pointing to a buy, which is obviously what happened. Price shot up, and you would have made profit from. So the more reasons to take a trade, the better. Instead of just trading based off one thing, a trend line or a support and resistance or the EMA, try and find as many things lining up in the same area, agreeing with what you want to happen. And the more things that agree, the more the price will usually go in your direction. So anyway, let me click play and we can see exactly what price did and how it played out. But we can see that price did come back down into the trend line and pretty much pinpoint on this moving average again. So this time we don't have the support and resistance zone in play, but we do have the bottom of this channel and we have this 200 moving average acting as a strong floor. So two good reasons to take a trade, take a buy trade from that particular area. And as you can see, pinpoint perfectly, price shot up. So what you would have done if you were looking to take this trade as price started to near this the bottom of the trend line and near this 200 moving average, obviously you would have been looking to buy to capitalize on the next move higher. You would have set your stop loss somewhere just outside the bottom of the channel, maybe somewhere down here. Give the trade a little bit of room to move around and breathe before giving it a chance to come back up. In this case, we needed none at all. It would have shot straight into profit. And then you could have set your your take profit ambitiously towards the top of the channel, or more conservatively somewhere midway, somewhere up here. So if we click play, we can see how price played out, and eventually price did shoot up and you would have taken profit here. If I click play, we can see how price sort of progresses through the rest of the channel. And we can see that it slowly but surely makes its way back up to the top of the channel around about now. So by this point, what we're going to be doing is extending this channel into the future. We've seen that it has worked before. We've seen it's worked multiple times along the bottom. So obviously what we're going to be looking for is more trades from the bottom of this trend line and this 200 moving average as it eventually catches up, and potentially even trades from the top of this channel too, like we've seen it's acted as a barrier further back in time. So if we keep clicking play, we can watch how price plays out, and slowly but surely we do get a touch of the top of the channel, which this time you've been looking to sell from to capitalize on the next move down. And I believe there was a couple more touches which would have provided you with some trading opportunities. So 1, 2, 3 times you could have sold, and eventually price would have moved down and you would have made a profit from doing so. Now we click play, we can see that price does start to near the bottom of the channel once again. Now obviously we haven't marked in any levels of support or resistance along the way as price has progressed, but this is kind of what we need to mimic and what we need to find. As many reasons as possible agreeing with a certain direction. So we have the channel already in, we're just extending this into the future to see how long price will stay within this. But we need to find some more recent support and resistance zones to kind of give us extra reasons to trade. So we'll find a level of support and resistance. We can see this is a bit of a pivot point in the market. Again, we'll take our box tool, we'll take the most significant high being up here, and we'll drag this across obviously more recent price action like this, tighten it up a little bit, get it as precise as possible, and then extend into the future. We can see this is a pinpoint perfect example once again. We have the most significant high up here. Obviously, you wouldn't have known this was a level of resistance until we saw rejections from this same zone, and then obviously extended it in the future. We can see it's acted as a ceiling so many times across here until price finally broke on the 21st. And after price did break on the 21st and was then above this same zone acted as a floor once, twice, and you'll see as price progresses, it continues to act like that. So we'll extend this again higher up like so. We've obviously extended this into the future too, so if price does come back down here, we could be looking to take a trade. We have the moving average starting to catch up as well. So again, this is almost looking like another replication of what we saw back here. Support zone, 200 moving average, ascending channel. So we've got the support zone, which was previously resistance, as we can see here. We have the channel, which is up here. We have the 200 moving average slowly but surely coming back into this same zone. So obviously what we're hoping to see is price come back down, bounce around here before jetting off back to the top of the channel. So let me delete that. We'll press play and we'll see how price starts to play out as it nears this zone once again. Now, this was most likely to do with some kind of news announcement, as it's quite erratic price action. Price completely dumps and then completely pulls back. And this is why it's important to give your trade some room to breathe. So like I was mentioning earlier, a stop loss just outside of the channel. Nothing too drastic, not right down the bottom over here, because it makes no sense to be down here. Because if the trade and the price does reach this low, we can quite clearly suggest that price is nowhere near remaining in this channel. So we want to keep this just outside of the channel, enough room to breathe, kind of like what we've seen here, and then enough chance to get back into the channel. So as we can see, price has just dipped through, it's pushed straight back up, and off it goes. So if we keep clicking this to see how price then plays out, we can see we've had another attempt of breaking this channel, and again, price has been forced back up, this time working really, really nicely with this support floor, with the 200 moving average, which is sitting just beneath, and obviously this ascending trend line. So you've been looking to buy in and around this zone, and like mentioned earlier, it's not pinpoint in the sense of this is where you need to enter your trade. It might be just a little bit above, it might be a little bit below. So you'd be on high alert around this zone, ready to start buying. Obviously, if we click play, we can see that slowly but surely price ended up back up here, and you would have made a profit from buying from this zone. So I hope this has made sense, combining multiple reasons to take a trade, and the more reasons, the more reliable your trade will usually be. Please do start implementing these on your charts, and if you haven't yet watched my previous videos, please go ahead and do so, as this will be the foundations for this video and putting everything together. I hope you found this helpful. I hope you've gained value from this. I'll be doing more videos like this in the future, covering different elements of trading and chart analysis. So please do tune into those, like, comment, and subscribe.